The S&P 500 and NASDAQ made new all-time highs today. Again, no, you're not watching an old video, it just keeps happening. And if past years are any indicator, we still have many more all-time highs to make in the year ahead. However, we are now getting into earnings season, and with expectations at extreme levels, retail investors really driving this recent rally, and funds dramatically underweight equities, they missed buying the dip as heavily as you and I did, could we see a sucker punch to reset the markets a bit and give those big players better entries? We have a lot to discuss for the week ahead, so join me as we look at the key charts for stocks, commodities, and crypto. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you all had a wonderful weekend. Before we dive in, if you do find value in the content, please like, comment, or subscribe below. It really does help the content get out there to more people, and it means a lot to me personally. Thank you also for all the kind comments on Friday's video. If I am ever lacking in self-esteem or need some affirmation that I can't find at home, I'm just going to go to the YouTube comments. And now that I said that, some of you might act as trolls, so I look forward to whatever those comments are going to be as well. I'm sure it'll be entertaining. So we're not quite into the heart of earnings season yet, but we have two big ones this Wednesday with Google and Tesla reporting. For Google, this is still the cheapest of the Magnificent Seven, and it's really cooking both on the AI front and with YouTube, which now makes up a staggering 12.5% of all TV viewing. The only thing really holding it back is the government and regulatory risk. But watch this one, as it could begin to run if some of that overhang clears. For Tesla, which I know is an important one for many of you here, the stock is really at a pivotal moment in the charts, so we're going to spend a bit more time on that one today as we get into the analysis. The V-shaped recovery we've seen in markets has been absolutely exceptional. If we overlay our current recovery with historical trends, and also we compared it a couple of weeks ago to the dot-com era, comparing the dot-com era to this current AI boom, we are getting into a historical period of consolidation. Now, this aligns with seasonal slowness in August and September, but we need to stick with trends and let price action lead while it is still up. As I mentioned in the intro, the recovery has really been led by retail, and retail involvement is now at levels that we haven't seen since 2021. And you guys aren't just invested in spot. One of the biggest holdings amongst retail now is 3x leverage funds, and many of you are playing options on top of that. Also, crypto is catching a bid with murmurings of alt season appearing, and Google search trends reflect that too. With these hot markets, earnings season upon us, seasonal weakness approaching, I worry that we may get hit by an unexpected correction that the big players leverage to get better entries. Now, I don't like being bearish, but it is something that we need to be on the lookout for in these kinds of market conditions. Turning to crypto, so many coins have broken key resistance levels, with charts looking a bit overheated. We're either soon going to find some consolidation with running again later in the fall, or we may simply break into this fabled parabolic bull run that everybody has been talking about. We had the Genius Act pass last week, which is a big tailwind for the industry, and on top of that, we have the Clarity Act soon coming, which is projected to pass in the fall. This will really get things moving for industry players as they have a framework off of which they can now build. With certain hot narratives out there, right now is really the time to focus your investments on the sectors that are moving, like crypto, semiconductors, fintech, and maybe some sub-narratives like quantum or psychedelics, which we've been looking at a few names on. So let's get right into the charts, and I've got some of your chart requests queued up at the end as well. Okay, moving on to the S&P 500, we broke out of our consolidation zone and we had that new all-time high daily close today. You can see that we obviously opened in much higher territory and then sold off throughout the day, which we've done a lot in recent history, where we have gapped up overnight in these two instances here and then sold off. Today, the sell-off wasn't as extreme, but there is a risk-off sentiment during market hours, and that was also reflected by gold rising. If we go over to the NASDAQ, you can see a similar thing where we broke out of the range and then dropped back into it and closed right on the edge of this channel. So I would love to see a stronger daily candle close above this channel, but that sell pressure was evident here in the NASDAQ as well, although not quite as heavy as in the S&P 500. Hey everybody, my mic burned out halfway through recording the charts last night, so apologies for the upload delay. Luckily I have a spare, so hopefully this sounds the same. And I'm just going to go through the remaining charts a bit more quickly. I just finished my morning trading and I've got a couple meetings coming up, but I'll just touch on the high level points and the chart requests at the end. Since I went through those already yesterday, I'm also going to give you the abridged version, but the important details to squeeze this in, and apologies again for the mishap. Okay, moving on to gold, and you can just see the risk-off attitude coming back in yesterday, and actually now again today as well, as gold continues to climb up. So I'm just using this as a leading indicator. Whenever we see gold increasing in value, it usually means that risk-on stock plays are decreasing in value, and we've seen that selling yesterday. We saw it at some points last week, and a bit again today. We've had this underside support line on gold, meaning that buyers are stepping in at higher and higher prices. So this now, after this consolidation, we had our top here in April, would put this 3,600 target in play if we break these range highs right here at 34, let's say 50, which we're getting pretty close to. And if things go really risk off, we could go to that ultimate target of $4,000 for gold, which would be way up here. Let's just draw in a line since we have not had that on the charts. But something would definitely have to happen in the world that would derail markets to get us to that point. So in the interim, I would just look to that 3,600. And maybe we have some bumps along the way through August or September, and then we can go back onto more of a risk-on environment in equities. Moving on to Bitcoin, and we did have one red weekly candle close. We're just consolidating. The good thing right now is we are holding this trend line, which goes all the way back to the 2021 bull market and is connecting all of our peaks through that bull market to our current two tops. So staying above that is a great sign right now. That is at about $115.8 thousand. And if we go into the daily, you can just see that we're continuing to consolidate. The main zone I'm watching here is our breakout point down below at 110,550. If we break and close a daily candle below that, that would be a sign that we are going to have more downward price action ahead and some more, let's just say, pain in the market. But as long as we are holding above that range and at least this local breakout zone, which is connecting our December and January highs right here through this current price action, this is not the same diagonal trend line that goes all the way to the bull market of 2021. As long as we stay above that, we are in safer territory. But I'm assuming because on the weekly, when we have major breakouts like this on Bitcoin, it usually runs for at least 6 to 7 weeks, and we are only at week 4 right now. So I'm assuming we have a bit more time to go. The one thing I will say, this is a price and time extension from our run up in April. So you can see how I just mapped that out from the lows to the highs right there. And this is doing two things. It's giving us a 100% price target at that $136,000. And it's also giving us a time target. And right now you can see that we are slightly weaker in terms of this current uptrend taking longer to get to this price target as we've broken below the trend line. So some subtle signs of weakness as we are getting into a seasonally slow period. But still, I'm optimistic for Bitcoin, but we just need to keep our eyes on these key levels. If we look to Solana, there has been a lot of strength in this trend, as you can see by the RSI on the 4-hour and even on the daily. We are getting quite extended, but we can stay overextended on the RSI for a fair bit. The really good thing for us here is that we easily broke through this level at $195, and this is the 50% from the all-time highs in January to our April 7th bottom. And so the fact that we cut through that really easily and the psychological $200 level is a great sign for Solana. The next major resistance zone, which I'll just extend a little bit, we do have a little bit of a zone here at 210, but I would consider that a minor zone. This 217 to 224 area where we found all this resistance and support, that would be our next major hurdle. And after that, honestly, our volume drops off, and I think we would have an easier time moving northward. But we are eventually going to have to cool off and consolidate a bit. The clip of this trend is increasing exponentially. As you can see, we had this underside support on our uptrend, and now the speed of our move has dramatically increased, which risks giving us a bit of a blow-off move, similar to what we saw in these periods here. So I would rather see us consolidate a bit, move up. Something like that is much more sustainable than a move that just shoots straight up and then comes crashing back down. So we want sustainable market structure overall, but there's a lot of momentum coming into the space at the moment. Going over to Ethereum, I'll just go all the way out to the weekly. We are already very overheated on the daily. The weekly has more room to run, and I'm imagining with the momentum Ethereum has and that we were able to blow through that $3,400 level quite easily, that our next stop would be this $4,000 level, which lines up with these past tops, and after that, I would have us at that $4,400 level by this previous peak and near our all-time highs. I will say that this is going to be our third retest of this $4,000 level. I suppose you could count this. It's not quite within tolerance when I talk about fourth time retests having a high probability of breaking out. I like that to be within 0.5%. We're at about 3% right now. So if we're treating this as a trend line at these wicks, which is actually, let's say 4,100, this would be our third retest, which has a higher chance of rejection. So given that the charts are overheated, I'm thinking that Ethereum might hit this, come back down, find a little bit of support, and then attempt it for a fourth time breakout. Something like that would be very healthy, and then it allows the charts to reset, to really push through and show us that fourth time breakout with a lot of momentum, which we've seen in other charts like Bitcoin and Solana. Moving on to MicroStrategy, and actually we have a development since last night. Last night we were still holding this breakout here of this neckline for the cup and handle pattern and also our key support at $420. We did wick below that this morning. We found support at the Confluence model cloud right there, and we are back right at about $420 right now. So that's a good sign. This doesn't invalidate our pattern and the target yet, but we definitely have to watch this. If the price action were to break down below the lows of the handle right here in the cup and handle pattern, that would invalidate that. I would love to see us find support in this zone at these tops right here, like at 407, to continue this bounce away. But MicroStrategy right now is very much beholden to Bitcoin and what that price action is doing. And since that has stalled out and Michael Saylor's hitting the ATM, that has caused the price to drop a little bit. Hopefully Saylor slows down on hitting the ATM since he has his new preferred offering, and we can see this recover, assuming Bitcoin will also start to bounce. Moving on to Tesla, and this is the very interesting one going into earnings tomorrow that we really have to watch. And you can see we've been in this wedge pattern, which is a pattern of indecision, and it doesn't really give us probabilities in one direction or the other in terms of the break. I would stack them slightly in the favor of a break to the upside because we approached it coming in from the bottom up. So we need to see what is going to happen with earnings. I could imagine that perhaps we run into earnings tomorrow during the day, bounce off of this, have a pullback on the actual earnings, and then maybe find support either at the 200-day moving average or somewhere right here at this support line around that $325 range before attempting a breakout higher. That would be the ideal scenario. And then that would also give us that fourth time breakout because we know that third time retests of a trend line have a very high probability of rejecting. We could perhaps even go all the way down here and then bounce up. We do want to watch out though for a break to the south side. I'm not necessarily bearish on Tesla, and overall the market is heading higher. There's a lot of momentum for them with their FSD, with robotics, AI, autonomy, everything they have going for them, right? And they've been lagging the market a bit. But we have the price target here for the wedge, which we're measuring out right here, and then we would have to map to wherever we eventually would break down or break up. And let's assume we get a breakdown right here. That would take us just past our lows to about 210. And if we break out on the north side, and let's just say we intersect that right here, that would take us to about that just below $450 range for Tesla. Again, this is not an exact measurement. We need to see how this actually breaks, and then we can revisit it. And the last thing I'll say, if we do have a bigger breakdown, we have this underside support that goes all the way back to March of 2020 that is underneath here. I don't think we will get that low, especially in the current market conditions, but it's just good to be aware of where we have those major levels kicking in for a stock like this. Just covering coin quickly, which actually yesterday I was saying looks a little bit toppy, and we followed through with some selling today. We hit that ultimate price target, which I thought we wouldn't hit till later in the year at 445, 450. And we had big news yesterday of Coinbase now offering perp trading services in the US, which is a huge moneymaker. And we actually sold off on the news and have continued to sell off. So that's just telling you this and Hood are a bit overheated. Not financial advice, but if you have covered calls you want to sell on a down day like this, it's not the best for a premium. It would be better to have sold here. Or if you want to take some profit, it might be a good time to do that. I don't know what the future holds, but it seems that these at least need to cool off for a little bit. And then perhaps when we see earnings for this and Robinhood in the fall, and Robinhood is trying to get CFTC approval as well for perp trading and for tokenized assets, I think they will most likely consolidate for a bit, maybe correct a little bit. And then once we see earnings for the next quarter, not the upcoming earnings, perhaps they'll run a little bit again. Moving on to HIMS, which did confirm this breakdown from this rising wedge pattern. We're seeing a little bit of a bounce today, but yesterday, actually, as we had this breakdown, I'm on the 4-hour here, I ended up selling some of my call options that I got into a bit lower at a slight profit. It wasn't really much of a win at all, but I just wanted to de-risk with this pattern in play and a potential price target down here at around $39, which if this takes a few weeks to play out, could intersect with the 200-day moving average. If we do get down to that level, I would go in a bit more heavily on a play like this, but it's just something to keep your eye on. If you are still in it, watch this price action. If we break back into the wedge here, then that would invalidate the price target. I just made a call to de-risk a little bit because I've got a lot of options open on different trades right now. Okay, I actually didn't cover OKLO yesterday, but since it's continued to break down, I just wanted to cover it really quickly here. So I got out of my call options already a bit earlier, which now I'm thankful for. I'm still holding spot on this, but we did have a substantial breakdown the last 2 days. We're not near earnings yet, but we broke below the 50%. If we don't find support here at the 382 at $58, I would be concerned for a further breakdown and this being a lower high. So that's something to watch out for. I'm looking at the 382 and these previous highs right here to play support. I mean, ultimately, if you bounce anywhere above these areas, it could still be a higher low. But for this to show some signs of strength, we would want to see support come in there. If you're not in a position and you miss this breakout, this zone right here around the $58 can be a good second shot at an entry. I don't have time to cover all the treasury plays, but I'm just going to cover a couple of them that have some things of interest going on. DFDV, we broke out from this wedge, which was looking bullish, and then we broke back into it the last couple of days. We are finding support here at this 2330 level, which is an area where we've really found a lot of resistance and support throughout this tightening trading range. So if we bounce from here and break back out of the wedge, that would be a good sign. If we come back down, I would be a little bit concerned because that would be our 1, 2, 3, and 4th time retest of this trend line, which we know has a higher probability of breaking down. They did just get to almost 1 million Solana in their treasury. Every time they've announced adding to their treasury, they have been selling off, which is an interesting or curious market reaction. So we just need to see what this does. But if we break down from this trend line, I would be tempted to exit my position for the near term because it would just be showing excessive weakness in this particular name. I also want to revisit UPXI, which I talked about selling last week as we were spiking into these previous lows. And the reason I sold my spot and my calls was because I imagine there were a lot of bag holders who were in deep losses once we broke down here on earnings and they were getting back to close to even, and we would see that selling pressure. Now, I was hoping to get another entry as we came down, but yesterday they announced another huge Solana purchase, and they are now the largest Solana treasury. And the price spiked up and then dramatically sold off. I think it was up 40% or something. Let's see here on that candle. No, sorry, 27%. So not quite that much. But this dramatic sell-off, yes, there was market weakness yesterday, but with Solana being strong and seeing this and the volume, it just feels like a little bit of a local reversal. So maybe I will get another shot at an entry between $6.40 down to $5.50, anywhere in there. I would be happy to look at giving this another try. And last one I wanted to cover from our trades from last week, which is ATAI. And this is a play for psychedelic therapies for PTSD and depression and other things of that nature. And we knew that the administration was considering taking action on this, and RFK just came out to embrace psychedelic therapies yesterday, so we got lucky with the timing. On the weekly chart here, the signs of strength were that we had this clear base forming at just above $1, then we were getting these higher lows, and as we came up and we broke this previous high, I got in this zone right here at these higher lows, and the chart was just starting to show us subtle signs of strength. And that worked out well timing-wise, because now from that entry in the low $2 range, we are currently at $3.45. So not bad for a couple of weeks in the trade. And I'm just going to watch this one to see where it can go. I imagine at these previous tops at $3, and actually that's almost where we got to, 63 cents, and these lows, we're going to find some resistance, which it seems like we are at the moment. And beyond that, I would be looking at these highs at $4.50 and these lows right here, so 450 to 463 for some resistance, figuring out where I want to get out of this play. It could run a lot further, but this is a risky space, and I'm just playing it for a little bit of a gain on a trade. Getting into the chart requests first, we have ASML, which is a semiconductor play. And this one has, let's see, we're on the weekly. I haven't really looked at these before. Well, I looked at them last night because I recorded this once. But this one on the weekly has good structure in terms of higher highs, higher lows, higher highs, presumably higher low here. We did have earnings last week, which weren't bad, but I guess they didn't meet market's ultra high expectations. We broke down from that. I was saying yesterday that holding this 200-day moving average would actually be a decent entry. Now we've closed the gap, and let's go into the daily to see where we could anticipate finding some support. And I would imagine these previous peaks here at around $692 down all the way to this confluence model moving average band right here could give us some support. So let's say 670 to 693. And we are starting to bottom out on the daily RSI. So we haven't found the bottom yet, but I imagine there is going to be some support stepping in here soon. And that can give us that structure of giving us higher lows here on the rebound. And then we can hopefully move away and start to recover on the price action a bit on this one. So if you don't have a position and you are interested, this could be a time to pay attention for this particular play to see if you can get a good entry in the next few days. But again, we are getting into tech earnings, so perhaps this one is worth just waiting on a little bit to see how things shake out over the next 2 weeks as we get some of the big tech companies and other semiconductor names reporting as well. All right, next one on the request list was Meta, which I think is actually darn close to potentially forming a double top here. Now, if we look at it on the weekly, it has recovered from our April bottom, but it hasn't made a high yet like other tech names. And I'm just noting that as a bit of a divergence, wondering what that is. And we know that Meta, while their ad revenue is good, they are investing heavily right now into AI, and they're playing a bit of catch up. So there could be some overhang from that. And also, I wonder how the market is going to react to the huge sums that they are spending on their AI talent and development. I don't think this is quite the same as the metaverse, where that was just seen as a giant money pit and the market really didn't like that. Earnings are going to tell us a lot on where this stock is going to go. So if you're looking to get into this, I would wait for earnings. It looks suspiciously like things might sell off a little bit, but I could always be proven wrong on earnings there. If you are in a position, I would honestly de-risk a little bit at this point, because there is the chance of this being a double top, which wouldn't confirm till we break these lows here, which are quite a bit down. But an asset like this, especially for this time in the market, isn't going to grow by the same multiples as some of the smaller names we're looking at. Like we talked about with NVIDIA, it's not going to double in value in the near term. Same thing with Meta currently. Yes, it might appreciate a bit, but there are faster horses currently. Next on the request list, we have Hype USD. That's not a squiggle. We're getting our first 200-day moving average. So Hype right now, there has been a lot of hype behind this name, Hyperliquid. And we have this underside support line that we're watching just to see if this trend breaks. That would signal perhaps a bit of a correction or some cool off. I'm on the weekly right now. On the daily, we are cooling off just a bit on the daily time frame and resetting. So the thing I'm watching right now is this trend line 1, 2. This would be our third touch point if we come into it. If you are looking to get in, those third touch points, I always like those for entries because they have the highest probability of bouncing and you have a clear invalidation. So if you get in right there and you break the trend line, you can stop out at a small loss and see where this eventually does settle. But we are in the upper band on the daily on the Confluence model cloud. So I think we can anticipate at least another bounce up here to see where this eventually settles. But it feels like in the near term, the majority of the move has already been put in. If we get a big raging crypto bull run, happy to be proven wrong. I know James did some studies on this and the fair value would be more around that $60 range. Where are we here? So that actually would very much comply with what we were sketching out of bouncing off this trend line, making another high to tag that, and then seeing where we go from there. But we don't have a lot of historical price action, so things like this are a bit harder to assess. Next on the request list was Poet Technologies. I don't know what they do. It almost feels like they launched a treasury play here, but they have a lot of volatility in their stock, so it seems like it's very much news-driven. I don't love a chart like this because it just is a little bit harder to predict when something is so influenced by external factors. You can say if you go out to the weekly that we are in a general uptrend from that bottom in December. So this actually bottomed a bit earlier than the rest of the market. We perhaps have a little bit of a double top in play here and we have those lows. I don't know. It's just not the cleanest chart. I would say for this one, I would not be comfortable entering it just based off the chart itself. I would want to know more about the fundamentals of the company, which I have not researched. So I can't really say one way or another. You do have this underside support line that you could watch for a bounce, but just don't love a chart like this. All right, and then the last request was Oscar Health, which a lot of retail has been chasing. It is well off its IPO highs here at $37, which is why we say don't chase IPOs, because most of them come back down to earth and then they find a base 12 to 18 months later, and that's a much better time to enter. This is on the weekly, so their IPO was in 2021, found their base in late 2022 with a lot of the rest of the market, and that run up through 23 and 24 was great. And now the question is this a bit of a double top in play? We did have this bounce up since April, and I think that's also playing catch up to HIMS a bit, right? Because there was so much hype in HIMS, and now it's sold off and it's come back down to earth. You might see a bounce, sure, but it's not a super strong chart right now. We dropped underneath the 200-day moving average. We rejected. If we are considering this a double top, which we did break the lows, so the price target from that would be all the way down at $5.60, which is a little bit more than a 50% pullback from where we are currently. If I take our current price to that, yes, almost 60%. So not a strong chart. I would not do anything with this right now with my own money, but you are free to invest however you see fit. And if you know more about the fundamentals of the company, awesome. Again, we are getting into earnings season, so A lot of these I would just take a wait and see attitude. How's the market going to react on August 7th when they report earnings? That'll tell you a lot about the trajectory for this stock moving into the fall. Okay, so that's it for the charts. For the week ahead, obviously watch those Wednesday earnings on Google and Tesla. That's going to tell us a lot. And aside from that, we have unemployment claims and flash manufacturing and flash services PMI on Thursday. And those are really the main events of interest this week. I'll be posting market updates on X throughout the week. So if you want the latest on Tesla and other notable things that move the market this week, be sure to follow me there. I put a link in the text description down below this video. I look forward to seeing you guys on Friday. Bye for now.